Hello everyone, today is Tuesday, September 28th, 2021. My name is Evan. Welcome to a Market Insights video, a short take on today's action. We're going to be looking at sectors today, and we're going to talk a little bit about the market environment. So this past Friday, we usually do our long form video analysis. It was in blog post in rare form this week, but we sort of ended our roundup of last week's action with a little bit of summary here. And we thought the action last week was constructive, that buyers drove us off of the lows. And I sort of left this parting words here where if we saw credit markets continue to weaken, breadth deteriorate, or explosive moves in interest rates, these could all derail the recovery attempt. And I'd say we got 2 out of 3 of those working this week, aka working against us. So in fact, derailing that recovery. And let's take a quick look at it. So we have right now a chart of TNX. So these are the 10-year yields. And you can see this week we have gone basically or continued to go vertical. And so we are certainly closing off of the highs of the day right now. But this magnitude, this explosive move in interest rates are always going to put pressure on, shouldn't say always, but certainly likes to put pressure on equity markets just because we are repricing everything in terms of long-term interest rates and so on and so forth. So growth gets repriced and you tend to get that more inflation value, quote unquote, value driven trades that work when the TNX really starts to spike. We talked a little bit about credit markets and you can see JNK here if we just look at like high yield ETF, and there's lots of different ways you can measure credit health, but if we just look at a very simplistic way, JNK here, you can see it's struggling, it's continuing to sell off today. So these are ingredients of why we're seeing some pain out there. We want to see interest rates stabilize. We want to see the credit markets signal that things are maybe okay, and we want to see maybe this dollar just let up a little bit here, which is also now breaking out to new recent highs. Okay, so what does that mean for stocks and sectors? So if we look at stocks, you can see in this top left-hand column, we're down about 2% across the board today. It's very widespread. Dow Jones is faring the best right now, and the weakest is the NASDAQ. NASDAQ 100 looking a little bit ugly here. If we take a look at sectors, so it's the second watch list on the left-hand side here, take a look at one green sector, and it's energy, which continues to work right now. Again, this has got that inflation tone to it. It has obviously commodities. Oil and natural gas are not letting up to the upside, so they are working, and that is obviously, giving a little bit of relief here to some of the stocks in this group. So energy continues to work. Financials continue to look pretty darn good as well. Take a look at the structure up here near highs. You can see obviously rejected off highs today, but sitting pretty here in this consolidation relative to a lot of things going on. If we look at materials, not so hot. I mean, they had this nice drive off of the lows. They are arguably, again, this is where it comes down to time frame. They're hanging in there on a longer term. They're maybe putting in this sideways range for the past 5 or 6 months, but in the immediate term, not looking so hot there. And then industrials look pretty similar to that. Let's go to the downside. So downside today is biotech. So biotech, and really recently, it has been the underperformer out of sectors. And some people don't consider biotech a sector in itself, but we're drilling down a little bit deeper. So you can see IBB here, it's holding up on, at least towards the upper end of this range, but it's certainly getting this thrust off of the highs. So this breakout attempt that biotech tried over the middle of September, it's at least failing right now. Maybe it's a shallow pullback, maybe it's a reset to the 150s, and then we can find support and make another run at the highs. But that's certainly what's going on right now. Real estate continues to pull back here, going down for its 4th week in a row. Now, obviously, real estate's had a really strong run throughout this year, but it is in the midst of a pullback for the 4th straight week. And utilities, pretty much in the same bucket here. Now you're seeing this as it's certainly tied to interest rates and everything that's going on there as well. Real estate, but you can see we are also down for the 4th week in a row, coming back down into some broader support here. I do want to touch on one last thing. So even though these sectors down here are getting really beaten up, throw on Bollinger Bands. So just a simple measure of where price is in relation to volatility averages or just what it's historically done within these Bollinger Bands, and take a look at IBB today. So even though it is the worst performer, it is entirely below the 2 and 20 standard daily Bollinger Band. That doesn't happen all that often, or at least stocks don't like to stay below there. You can obviously get these breakaway runs where stock will ride below for a few days, but this is, a little bit of sort of an extreme move here, right? If we look at real estate, you can see same thing. We're below the lower 2 and 20 Bollinger Band. So the way I like to think of it is like, look, if you're short these and you're riding that momentum down, just trail that stop and continue to enjoy the ride down. But in terms of adding new positions to the short side, you need a stop loss. That is obviously, that's trading 101, but those are very important when you start to get these momentum moves. You can absolutely let momentum work in your favor, but you just need to know when it's going to turn here. And so when you look at Bollinger Bands on some of these sectors here that have been selling off for a handful of days, we are, by these bands, pretty oversold in the short term. So hopefully that gives you some food for thought, though it's just a little checkup there. Let's look for some late day, maybe stabilization. Look for those interest rates to cool off if you want to see a bottom in this market. That's what I'd be paying attention to. Hopefully that helps. Trade them well out there, and we'll see you back here in the next video update. Thanks so much.